All right, so we had a very interesting week in the markets. This week, I think there was over 100 S&P 500 companies releasing earnings. So there's a lot of companies I want to get to, so I'm going to keep the intro pretty short and sweet here. First things first, if you get value out of this video, please like and subscribe. I really appreciate that. First things first here, we had news this week as well that MicroStrategy, this is Michael Saylor responding to Microsoft, who's going to be voting on adding Bitcoin to its balance sheet in the near future. And this is huge news, and not necessarily because it's a done deal, they're going to do it. The main reason is you already have Tesla, obviously you have MicroStrategy. Like, the trend is clear, and we're still in the very, very early innings of this. But I think the trend is established that it's only a matter of time until many companies, if not the majority, if not all of the top companies, have Bitcoin on their balance sheet. Especially when you consider the amount of money that some of these companies have. I think some of them have down near $100 billion in cash on their balance sheet. It makes no sense at all to not allocate a percentage of that to Bitcoin. Especially when you consider the fact that inflation clearly is here to stay, whether it's going to be 7, 8, 9, 10% or 3%, either way, it's still going to be more elevated than normal from the looks of things. And even beyond that, just because the CPI is showing there isn't inflation doesn't mean there isn't inflation, because the CPI is cherry-picked data. So I think that this is huge news for Bitcoin. I think that 2025 is going to be the year. If you look back to the last halving, it was kind of October, November of 2020 where it really took off. Right from late 2020 to I think it was like the spring or summer of there was like a massive run up, and then there was a bit of a pullback, and then there was another big run up towards like October, November of 2020, and then it went back down. Or maybe it was 21. It was 21, sorry. So that's, I think, what's going to happen again. I think we see a big run up over the next 6, 7, 8 months, and maybe we get a little bit of a pullback. I mean, there's going to be pullbacks in there, and then we go higher again. Where it's going to end up in there, honestly, nobody knows. I still think we're going to see 100,000 fairly soon. And then we're going to see probably 150, 200, maybe 250, 300 for all we know. But there's no way that stuff like this can be happening and it not be bullish, at least long term. So let's get into the markets here. Like I mentioned, there's a lot of companies. First things first, S&P was down about 1% this week. If you look at the equal weight index, it was down even more. Mid caps were down about 2%. Small caps were down about 1%. But then on the flip side, the NASDAQ was actually up a little bit, and the Mag 7 was up like 2.5%, 3%. So this was a week where growth clearly outperformed value, and large cap clearly outperformed the mid caps and the small caps. So a little bit of a counter trend there. Do I see it continuing? Probably not. But again, stranger things have happened. I still think, even though the S&P was down on the week, I still think the trend is up until we get we're going to need a clear catalyst for things to go down. It could be the election, which is just over a week away, about 10 days, give or take. And then after that, we have the end of the year. Obviously, I think we probably see a little bit of selling going into the year end, especially considering you have people that will be closing out positions for the end of the year. But then going into January, you have all that new TFSA and IRA, all that room gets increased in the new year. And not only that, chances are a lot of pension funds and those kind of things have new money coming in as well that needs to be allocated. And with rates coming down, that just increases the likelihood that it ends up in the hands of stocks. So that is that. As far as earnings go this week, first things first, Tesla was the biggest of the companies. Tesla missed revenue. They beat earnings. Tesla, they came out with some kind of shaky guidance. Although it was up a lot on the week. Tesla was up a ton on the week. I've said time and time again, I think Tesla's way too overvalued. They are a decent company. Honestly, I don't know if I ever would buy Tesla simply because of the fact that car companies typically have not been good investments. In fact, I don't think they've ever been good investments. And they're just way too expensive. Like, they'd have to come down over 50%. We're talking probably 60, 70% before I would even consider buying Tesla. So it'd be well below $100 a share before I would buy them. That's just me. Next company up here, ARE, Alexandria REIT. They did beat FFO. This is a company I do have on a watch list. I have owned them in the past. WRB, this is one of my favorite insurance companies. I do have a position in them. I do like them. They did basically right on when it came to earnings, just a tad above, and they were a little bit below when it came to revenue. I really do like this company. They were actually down on the news there, and I'm actually buying them right now. I don't necessarily think they're a great value, but I am buying them right now. Verizon. This is a company I don't think I ever would buy, but there's a lot of people that own it because of the dividend mainly. It did beat earnings. It missed revenue. It was down on the week. Again, 6.5% dividend, but when you look at the share price, it's just not up to snuff in my opinion. I mean, go back 5 years, the shares are actually down. So these are companies you want to avoid, in my opinion. A good example of one. AOS, this is another one that I'm buying right now. I really do like it. Basically they were right on with their earnings, but they have came down recently, which is kind of interesting. But again, I think that a pullback is not necessarily the end of the world here. Freeport McMoran is a company I've owned in the past. I probably would buy them if they got cheap enough. Missed earnings, beat revenue. I just think that there's better options when it comes to the copper play. The next one is Lockheed Martin. They beat earnings. They missed revenue. Decent company. I would buy if they got cheap enough. I just think they're too expensive right now. Pulte Home is the next one here. This is probably my favorite of the home builders. I think they're a little expensive where they're at right now. They did beat earnings and revenue. If they got cheap enough, I definitely would buy them, but the home builders have had a big run up over the last year or so, so I think that most of them, if not all of them, are just too expensive where they're at right now. CNI, a company I do have a decent sized position in. They slightly missed earnings and revenue. I do have a small position. I don't plan on probably ever buying anymore, but that's just me there. EWBC, this is one of the better regional banks in my opinion. I do have a very small position in them. They beat earnings and revenue. They were up on the week, and they basically are at a 52-week high as well. MANH, this is Manhattan Associates, another company that I really like. I would buy them if they got cheap enough. They're just way too expensive where they're at right now. They beat earnings and revenue. They're actually down on the week. APH, Amphenol, this is a company I do have a good size position in. It's over 5%. I really do like it. It's just too expensive where it's at right now. And given it's already over 5% of my portfolio, I don't think I ever would, maybe not ever, but anytime soon I definitely wouldn't be buying. AT&T, another example of a company I never would buy. I think it's a dividend trap. I mean, they cut their dividend recently, so that's always a bad sign. Beat earnings, missed revenue. They're actually up slightly on the week. Coca-Cola, a company I would buy if it got cheap enough. I just think that the growth is not going to be there for a company like that. They're just too large, and the growth opportunities are just not there. Beat revenue and earnings, although the stock was actually down on the week. So interesting there. Lennox International, this is a company I have on a watch list. I would buy if it got cheap enough. Beat earnings and revenue, up slightly on the week. Good company in my opinion. ODFL, this is a company that I am buying very slowly right now. This is one of my favorite companies here for sure. They do trade at a little bit of a premium, so you got to be careful on the valuation, but I think anything below like 180, 190 I think you can buy, but again, do your own due diligence there. They did beat earnings. They slightly missed revenue. They were basically flat on the week. If you look at the next one here, Roper Technologies, this is one I have on a watch list here. Beat earnings and revenue. They were down a little bit on the week. Thermo Fisher Scientific, another one I have on a watch list. They released, they beat earnings, they missed revenue. The market took that as a concern there. It was down on the week. AMP, this is one that another one I have on a watch list. They missed earnings, they beat revenue, they're down on the week. Next one here is CP. This is another company I might buy if it got cheap enough. Obviously, I have it on a watch list. Missed revenue and earnings, they were down on the week. So again, the railroads got killed pretty bad recently, but again, I think they'll be okay over the long run. Graco, this is another one I have on a watch list. I have a very small position in. Missed earnings and revenue, they were down on the week. Lam Research, another one I have a good size position in, about 5%. Beat earnings and revenue, they were up quite nicely on the week. ServiceNow, another company I have on a watch list here. I really do like them, although they're just too expensive. I think they're a really good company. They're just too expensive. They beat earnings and revenue. Next one here, ROL, Rollins. This is a company I have on a watch list. I do not own. I probably would buy it if it got cheap enough here. They missed earnings. They were down quite a bit on the week. So again, good news if you want to get it cheaper, but bad news if you own it. So next one is WCN. This is another one I have on a watch list. Waste Connections, kind of like a waste management competitor. Also trade fairly expensive. They beat earnings and revenue. They were actually down on the week, so that's kind of interesting there. ALLE, this is one I do have a small position in. I have recently stopped buying it because I think they're too expensive. They beat earnings and revenue. They were down on the week, but I still think they're too expensive. HIG, this is another insurance company that I really do like. I have them on a watch list. I've never bought just because I think they're too expensive. Beat earnings and revenue. They were actually down on the week. Kind of surprising there. Tractor Supply, this is another one I have on a watch list. I would buy if it got cheap enough, most likely. They beat earnings and revenue, however, they were down on the week. AIT, this is another company I really, really like here. I have a small position. I stopped buying it recently because they're basically at a 52-week high. I think they're too expensive where they're at right now. They beat earnings and revenue. Very good company in my opinion, just too expensive. KNSL, this is another insurance company that I really like. They are expensive where they're at right now, but given how fast they're growing, I definitely think they do command a premium in the market. The real question is, do they command this much of a premium? They did beat earnings and revenue. The next one is GLPI. This is a REIT that a lot of people like. I prefer Vici. They're kind of in a similar realm. They beat FFO and revenue. They were down on the week. However, they do have a dividend above 6%. But when you look at their dividend, they did cut it back in 2020. I believe Vici did not. And if you also look at their dividend growth, it's not quite as good as Vici either. So that's why I prefer them. I do think they're a solid company, though. UPS, a company that I don't know if I ever would buy, but it's a kind of a good barometer on how the economy is doing. Beat earnings and revenue, so that's good news. They were up on the week there. The next one is Valero. I do have a small position in them. I think they're one of the better oil companies. Missed earnings and revenue. They were down on the week. Not the greatest news for oil companies recently, but that's kind of expected. Nothing out of the ordinary there. Another company I really do like here, and the last one I have on the list, is Carlyle. This is a company I am buying right now. I really do like them. They did beat earnings. However, they were down on the week. Like I mentioned, I really do like them. I think they're a very good company, and that is why I'm buying them. So that is everything from this week. I got that done faster than I thought I would. Long story short, like I mentioned earlier, when it comes to the market, is I think that the near term, I still think it's going to be bullish. I think that we could get a sell the news event when it comes to the right before the election or maybe right after, and then we continue the trend back up, and then maybe in December we see a little bit of a pullback, because especially when you have years that were up quite a bit, a lot of people want, especially like the hedge funds and those kind of, they want to sell and lock in the gains. Honestly, they might have done that to some degree already, because a lot of times they'll front run that, but there's some people that definitely wait till later on, November, December. So I think that we could easily see a short-term pullback, barring any major news. I don't see a major pullback in the near future, because the last quarter GDP was up, so the chances of a recession pretty low. I think that we're going to need to wait at least 6 months before we actually see a realistic chance of a recession. But nobody knows what's going to happen. The best strategy, like I've always mentioned, is simply just buy good companies for a good price. You don't need to worry about interest rates. You don't need to worry about short-term moves in the market. Whether the market is, all-time highs or it's down 30%, that shouldn't matter if you're an individual stock investor. If you're an individual stock investor, the market's kind of irrelevant and so are interest rates. If your company is completely reliant on, low interest rates to get by, well, they're probably not that good of a company. And the same thing goes for whatever it is your investment strategy is. So that's something that I think is very important to bring up for people is, I know obviously it's hard. Obviously it is hard, but short-term volatility is short-term volatility. It will pass. And the reason we know that is that it's always passed. So anyway, like I mentioned off at the start there, if you get value out of this video, please like and subscribe. Really appreciate that, and stay tuned for more.